Everyone in the world of investing is going to make mistakes. The best investors ever make mistakes. That's okay. If you have a good process, still things are going to happen. They're going to prove you to be wrong. The problem I have, and this video is dedicated and based on the fact that somebody who had no process made ridiculous claims at the height of hype for electric vehicles and is now turned around completely, not because the fundamentals have changed, but because his outcome over the last 3 years has been poor. That is the definition of a speculator, not an investor. And this video is aimed at that.
Guys, I'm not gonna lie, I am fuming inside. This video, I'm gonna try to stay calm. I was tagged by one of my great followers on Twitter. I just saw that Meet Kevin is going short on Tesla. Now, first off, to give him credit, he sat there and apologized in the video. He said, I'm sorry. I know I was Mr. Tesla. I get it. I'm going short on them. Then he goes through his tirade of excuses why he's shorting Tesla. If you recall, if you've been a follower of this channel for over 3 years, you recall I made a video back in May of 2021 where I saw his video on valuing Tesla. And I said, this guy does not get it. He subtly made a reference to us in another video making fun of us. At that time, he was calling for Tesla by 2030 to be an $850 stock after splits. The stock was at $225 a share when we made this video, split adjusted. Today, it's at $160. That's 30% lower. And he just said he's going short. From May of 2021 until November of 2021, this is what Tesla stock did. And a lot of people out there gave me flack and said, you don't get it, Paul. You don't fucking get it. It's Tesla. It's not a car company. It's a tech company, you fucking idiot. Well, guess what? What has Tesla's financials done since that point? Let me show you. You're right. I was an idiot. I didn't realize how great the company would become. Look at the freaking financials. In the year before, the year of 2021, they did $53.8 billion in revenue. Last year, $97 billion. And the stock is down 30%. Why is it down 30%? Because in the short run, stocks are a voting machine. In the long run, they're a weighing machine. This isn't the only company this has happened to. The entire EV industry has gone to shit in that time. But too many hypesters out there, too many fraudsters out there, like Meet Kevin, were out there pumping their personal opinion on a company. And guess what? Their story was right. But now that the stock is down, they're all of a sudden bailing on their sure thing. That's what I'm trying to teach everybody. When you base your entire thesis on a story, eventually people will stop caring about the story when they see the stock price go down and they see no movement. 3 years now. I remember getting into arguments with people I went to high school with saying, Paul, you don't get it about Tesla. That was 3 years ago during the mania. I'll say it again. NVIDIA, another hype story. Have I been wrong? Absolutely, guys. The market has gone way higher than I expected to go. Did I short NVIDIA and it absolutely blew up my face? Absolutely. I take it. Great, I did that. That was wrong. But the investment thesis is still accurate over long periods of time. This market is overhyped. It is a bubble. And don't expect good returns for the next 10 years. Doesn't mean you won't make money. I literally have friends telling me I'm not good at stocks. I'm fine with that. To all my friends out there who believe that, you're all stupid. I'm sorry. You're dumb. When crypto people are considered the smart people at the table, you're stupid. I'm sorry. Meet Kevin is now shorting the company 30% below when I told him he didn't understand what he was doing, and he flippantly called me an idiot. Why? He wanted to sign a 70 PE to Tesla in 2030. 70, not 17, 70. This PE to Tesla in 2030. And he was being conservative, he said. Conservative, he said. Guys, I will make mistakes. I will absolutely make a lot of mistakes in investing. My shorting was not an investment mistake. It was an emotional mistake. I didn't realize this market. This is all my fault. But I will tell you this. Every investment is the present value of all future cash flow. That's it. And when the story sounds good, we make assumptions on cash flow that make no sense. And unfortunately, most of the people who buy on hype aren't making an assumption of cash flow. They're just hearing a story and they're seeing a stock go like this. Anybody out there watching, show me a company that's gone like this and stayed like that. Show me. EV was changing the world, Paul. EV changes the world. You don't get it. Have you ever seen the chart in the last 3 years on the EV companies out there? The best one, the only one in the positive is BYD. It's up 8% over the last 3 years. Everybody else is in the negative. Some of them are all the way down to zero. Think about that. When I was told I didn't get it, because Kathy Wood gets it, because Meet Kevin gets it, because Tom Nash gets it, all these other idiots who for a while looked like they were right when Tesla went like this for the next 5 months. And since then, it's gone this way. Who's right now? I don't know. The future isn't done yet. I do believe Tesla is an incredible company. I do believe Tesla has absolutely changed the automotive industry. They literally changed the entire industry. But it doesn't mean you pay whatever price. And you'll find every justification in the world to sit there and do it. Guys, this is going to happen with AI. It's happened with EV. It happened with a thing called cannabis. Anybody remember cannabis? 5, 6, 7 years ago, I was pitched cannabis like crazy. Where do you hear about it now? Nowhere. Guys, do you want to make more money in life? Do you want to sleep better at night? Realize that hype doesn't last forever. Realize euphoria doesn't last forever. If you go back 5 years on EV, you'd be in the positive today if you invested in all EV companies equally. But guess what? That would have required you to be well ahead of the game and realize that EV was the next big thing. And you wouldn't have done that. I'm sorry. And then, by the way, of all the 7 or 8 EV companies I can think about, only 2 are in the positive over the last 5 years. And Tesla's one of them. So guys, I know I've made my mistakes and I will continue to make mistakes, but with the right process, my rights will be way better than my wrongs. With the right process for you, where you can apply these same basic fundamentals to other industries, you will be right in the long run. In the short run, though, are you okay being wrong, especially in a public manner like I am? Luckily for you, you don't have that problem. I'm okay being told, Paul, you're an idiot, you don't get it. Because at the end of the day, I just sit back and I can make this video saying, yes, I'm picking this one out. But guess what? There have been so many others. Peloton, Workhorse, Palantir. Palantir people are talking about how Palantir is back. I said at $45 it was worth $5. Is it above 45 right now? It's at 25. It got to 560. I didn't buy it because it didn't hit my price. Do I regret that? Sure. But I don't know where Palantir is going. I don't know where the fundamentals are going. But right now I'm looking at it going, Amazon, I was 100% wrong on. Like nothing in this world could happen that makes me go, well, I was right on Amazon. No, I was wrong on Amazon. I was wrong on the stock market being overvalued in 2018. Did the metrics show it was overvalued? Sure, but the fundamentals got a lot better faster than the market turned around. I was wrong, 100%. The difference is when I'm right on things, I think they're going to compound for a very long time. If you want that kind of process, come here. It's that simple. Guys, there's going to be more stories like this as time goes on. I'm going to get even more frustrated as time goes on because I look at this and I think guys like that commit financial manslaughter. They're sitting there and they find one stock that goes up a ton and they go full boat in it and they feel like geniuses. Nothing makes people feel smarter than when a bull market makes their stocks go up and makes them feel like, oh, I'm a smart guy. I'm a real smart guy. Don't get me wrong. My NVIDIA and QQQ short in the last 15 months has made me feel pretty stupid. I was thinking to myself, maybe I don't know. But then I see all my other companies that I love. I don't even enjoy them. You guys, I have companies that have doubled since I bought them. Do I sit there and brag about that? No. Why? Because I'm not in them for a doubling. And they could go right back to where I bought them below. I'm in this for 10 years from now. And it's consistent in the fact that I sit there and say that. I personally believe Tesla is still overvalued. If I pull up my stock analyzer tool and look at Tesla and make my assumptions for the future, 10, 16, and 20% revenue growth for the next 10 years. Next 10 years, that's a lot. Profit margin, 8, 12, and 16. That's a lot. Free cash flow, matching that, even though free cash flow has not matched that at all over the last 10 years. That's a lot. PE, currently at 38. Nice job, Kevin. Way to go on 70. Could still happen. But it would take a booming bull market, euphoric market for that to happen. Price of free cash flow and PE of 15, 20, 25. What's Tesla worth, in my opinion? At 9%? It could justify today. Assuming 16% revenue growth. So guys, what's 16% revenue growth for the next 10 years? 1.16, the power of 10 times 95, 420 billion. I could see that happening. This is not an unreasonable price for Tesla where we're at today. Does it still assume quite a bit? Yeah, this is the problem. I have a problem with consistent car company generating 12% bottom line profit. It would take them expanding out of the car business because apart from Ferrari, it's hard for a bottom line profit in a car business to hit 12%. So I still don't feel comfortable, me personally, buying Tesla at 162. Meet Kevin is shorting it. I think he's looking at a lot of technicals involved with it too, but he's sat there and said, the Fed's the reason? Kevin, I have one thing to say to you. Go fuck yourself. When we sat there and talked about people saying rates can't stay this way for long, did I expect rates to jump up this fast? Absolutely not. I wasn't guessing that. But when you make your assumptions based on historically low rates, it's no different than if you were in 1981 making your assumptions based on insanely high rates. It's just as idiotic. Now, can rates go up or down from here? I don't know where they're going. I have no care where they're going. All I care about is when I buy a company, do I understand what I'm buying? Do I understand the cash flow? And if the price goes lower, but the fundamentals continue the same, do I still want to buy more? That third question, that's the internal question. Can you still buy as it goes down? Kevin, you're a hypocrite because you're the kind of guy who 3 years ago just said, if Tesla falls in half, I'm buying more. Well, guess what, Kevin? It's down 30% over 3 years. That's only 10% a year. You should be putting the farm in this thing. Unless your thesis has changed from the car company itself. Don't blame the Fed. As I've always said, I've said it in these videos before, eventually people will blame the outside forces out there. This is why it's different. It's never different. It's never, ever different. All that's different is our perception. All that's different is the stock went like this. We're reacting to the stock price, not to the fundamentals. Because the only thing the fundamentals have done since then is go like this. The fundamentals have done this, Kevin. They've gotten better and better, and they continue to do so. Who cares if the freaking Fed raises interest rates more? This company's killing it. The difference is it's not worth it today. That's not enough margin of safety. Guys, we need margin of safety. You know why? Seth Klarman says the 3 reasons we need margin of safety. 1, investing is an art. It's an imprecise art. We don't know exactly what everything's worth. 2, we don't know the future. Guess what happened 3 years ago? In the last 3 years, did he own Twitter? Elon Musk didn't own Twitter. Did he open his mouth about politics? He didn't. All of a sudden, every hippie who loved Tesla suddenly hated Elon. And 3, we're human. We make mistakes. And I give Kevin credit for owning up to that. But I also criticize him going, just say I did this and I made the wrong assumptions and move on. Just like I did with Amazon. I didn't understand the way Amazon could grow its business. The way I did with NVIDIA. I didn't realize how stupid the market could be. I'm fine with that. But I'm willing to bet on NVIDIA. Mark my words in this video. Somebody say, I'm going to record this. NVIDIA will have a hard time being above this price 3, 4, 5, 10 years from now, I think. Why? It has gone completely parabolic. It is making assumptions for the future that are just too hard to justify. Guys, if you like this, you want to talk to me about it, join our community. $7 for 7 days. It's a way to feel comfortable. I don't get this way in the community. I have very good conversation. I just get so livid when it's so obvious to me that people are committing financial manslaughter. And I have no problem getting beaten up over it here. Paul, you said, I love it that people's best argument against me is, Paul, you hated Amazon in 2015 and you hated NVIDIA now. Okay, great. Guys, overall, the prices have shown that I haven't been right. Have there been a few wins here and there and big? Absolutely. But I haven't been right yet. But I truly, truly believe that the market we're in right now is not sustainable. I truly, truly believe that when you see crypto at these all-time highs, these meme coins doing well, I have a hard time believing that is a safe environment for investing. When I see interest rates at 5.3% on risk-free money over 90 days, I am absolutely flabbergasted at how we saw all-time highs in an already bubblicious market. So guys, this is I feel like a sports analogy. We've got an interception. Tesla, these things. Tesla, by the way, I've only had 2 shorts in my entire career that have worked out. Tesla and Facebook at the very, very beginning. I shorted Facebook at 31, exited at 22, went to 18, and then went up to 300 a billion. The rest of my shorts have been terrible. I've learned my lesson about shorting. Unless I have a process for shorting based on valuations is a terrible idea. Absolutely terrible idea. Slap me on the wrist. 100% wrong. Absolutely stupid. Never going to do it again. But we sit here and look at the future and what it holds, And what has to happen for these markets to be fundamentally sound with 10-year PE ratio at 34, with the stock market GDP ratio 100% higher than where it should be? But of course, we look at what's happened in the last 4, 5, 6, 7 years, and that has never mattered. But I see the people around me, the things they say, and I go, it's just a matter of time. But again, as many investors would say, being too early is indistinguishable from being wrong. Doesn't mean it is different from being wrong. It's indistinguishable from being wrong. And I take that. Now, I've owned 13 stocks I can talk about, another 5 investments that I don't talk about. And I love them. And guess what? I never look at their prices. The only thing I do is set a watch list item. And if it goes below a certain price, I buy more. That is real investing. Not bailing because the company you said was perfect is down 30% over 3 years. That's not investing. When the fundamentals have gotten double as good. Fundamentals have gotten double as good. The stock went down 30%. You thought it was a buy before, and now you're not buying. That calls you a hypocrite. Thank you for your time.